All right, morning to you, everybody. This is the 21st of July. Today is a Wednesday and broad-based rallies across the board. Nothing to worry for now. That's the caption for this morning. All right, so what happened yesterday was really broad-based buying. Anything and everything and think of went up, okay? Even Bitcoin, even all the cryptocurrency went up. Stock market all went up. And of course, the one that is very clear was even the bonds market. The yields also went up, even though they're supposed to be inversely related. So it is basically, anything that can buy, someone has just bought it. So there's two interpretations on this. It's either there's nothing to worry about now, or this could be what we fear most is a dead cat rally, dead cat bounce. Okay, so we talk about this later on. All right, my foot is okay, thank you. This Eric, right? Yeah, my left foot is the one that's swollen up, but now it's getting a bit better. Still painful as I'm talking to you guys. So think about this. I'm having gout right now, still painful, and still doing morning MAO for you guys. So seriously, find someone. If someone have gout, I think they're home resting already, right? Definitely not working. Okay, so everything went up yesterday. Indeed, everything went up. All right, so you can see anything you can think of all went up yesterday. This is all the what happened on the cash market. Okay, so before we start our morning MAO, let's test disclaimer as usual. Do understand this. My job is to make sure you guys make money, and my job is to make sure that you guys understand that what I share is my personal opinion. And if you accepted the above, you identify me, and you know that your potential losses can be more than you can expect. But make sure that you do your risk management, then that will be under control. Okay. All right. So let's begin with this one again. The stock market is filled with individuals who know the price of everything but the value of nothing. I think that's a very powerful statement. And this is from this guy, Philip Fisher. Now, who is Philip Fisher? He is the so-called second mentor of Warren Buffett. All right, second mentor in a way. Because Philip Fisher's book was written and Warren Buffett loved that book so much. All right, he basically put Benjamin Graham as first and Philip Fisher as second. All right. So if you can understand this, it means that the price of an instrument isn't as important as the value it gives you. All right. This is something that you must take note of that. Okay. So that's why to be a successful trader, you need to have a lot of such positive vibes around you, people who can share good stuff with you. And from there itself, you try to pick it up and try to be even better. Okay. All right. So that is what I want to share with you as of this morning. Okay, all right. So that is the stock market. Let's go to the charts right now. All right, let's enter the stock market right now. I can see there's some movement already on Hong Kong side. Let's begin. Okay, so let me bring out all the charts first. Okay, so China A50 now is trading higher. You can see that China A50 is trading higher. And why it's trading higher? Because it bounces off the MLP this morning beautifully. The opening price is actually at the MLP level. And then it bounces off and now it's trading higher. So this is a very positive sign, at least for the buying. Now, I want to just reiterate one more time and again, unless it's a very terrible bear market condition. If not itself, majority of the time, the market is always up. You must always remember that. Majority of the time, the market will be up. So you do see more white candle than black candle overall in any market. But of course, in a bear territory market now, or bear terrain, then of course you see a bit more black. But majority of the time, it will be still white color candlesticks, all right? So that's the first thing you must take note of that. And then, of course, about Hang Seng today. Now, Hang Seng this morning has gapped up, and now it's shooting up very fast. It's trading much higher right now. All right, so there is seemingly a bit of deprive of the market been pushing down for quite a while. But yesterday, the market did a very strong reversal hammer, and this is what is happening right now for the market. Okay, it's a very strong recovery at the moment. So this is chocolate bar over here. The market has covered it beautifully. All right, that's how when you are trading the market, you look at all the chocolate bar, you will know exactly what to do, and you can forecast yourself where it will be going. So the question will be that how high will this market be going? Well, there is a possibility for Hang Seng to even cover the gap. It all depends on how the China A50 perform later on, and also generally the market. Okay, morning to you, Kelsa, Luis, Fred. All right. So this is what I'm seeing right now, but still, you must understand that both the MAs are still above, MA 30 and MA 200. So by that definition itself, the market overall is still in a downtrend. Hence, therefore, it's not half surprised to see market having some form of resistance as you go higher. Okay. So if you want to put into perspective and put with the charts of a TWB system, all right. So what I do is that I do the Hang Seng chart right now. I bring it over. Now you can see that this is the Hang Seng chart very clearly. So guys, tell me what to do, right, guys? Take a look. The opening price of Hang Seng this morning opened above pivot 1. Now you realize that our pivot is really drawn in a very, very unique way. No one in the world will draw a pivot like that, right? Seriously, I mean, just from the screen again. Yeah, I mean, who the hell will draw a pivot like that? Seriously, no one in the world draw pivot. You draw support level, I can understand, but no one draw pivot like that. So that's the reason why I'm saying that, right? Our pivot is really very unique. So this morning, right, once the market opened for Hang Seng, even though the KSI is red, we can actually go long in Hang Seng as long as the rules apply to it, meaning CCRY above OP, right? So apology, this morning I came in late, but if you remember the rules, you will know that this morning you cannot short Hang Seng. And truth be told, you see the moment it opened already, right, it shoot all the way up and went to KTR plus 3. Wow. So of course, can we could it have shorted the market? I mean, can we long the market? By right, you can't long because there's no entry, but at least you won't short. And if you're shorted, right, you'll be slapped in the face in within just half an hour. So that's the reason why you need to understand the power of this pivot. All right. So that is why for those who are very adventurous, who don't mind taking risks, they may have went in the morning in the market. When the market goes above OP, they may go with the M1 chart maybe. But I say again, as long as you know what you're doing and you know that what we share makes sense to you, you know why the market is going up today. Okay, so that is the first piece of information that I want to share you this morning. And now you understand why, even though the pivot is drawn in such a unique way, right? It's basically based on mathematical formula. Okay, so you got an idea now. That's pivot for you, and that's Hang Seng. We'll come back to this later. Okay, so it's a new oration for our MAO. We talk about the market first. Learn about the market right now. Now this is the Dow Jones, and yesterday I already reminded you about the Dow Jones MA 30, and I said that if the market stays above MA 30, it's a buy. I'm not too sure. Have you heard me? But it really have happened. So that is the point that I want to stress this morning, is that you guys already heard me yesterday, and I give you the number. This number was 34,538 yesterday, right? Remember I said that, and I said that as long as the Dow Jones stays above this figure, the Dow will go up, and indeed it really went up. So that is the reason why we have to trust what we say, and of course we have to do. And the MA 30 now will be here. Today's MA 30 will be here. The MA 30 for today is going to be resting at 34,588 level, around there. Okay, not drawn to scale. So which means that as long as the Dow Jones stay above 34,588, the Dow Jones most likely will be trading higher, and this today is still way above it. So that is the one thing to look at it. The other one to look out for is that this is the BNB, right? The recent BNB. This is the guy. Okay, this one. Okay. So this BNB now, the market has went back into the BNB range. So which means that, right, there is a possibility that the market may be going all the way up, that's past the BNB RL, and go all the way up by 1/4. So that's the reason why Dow Jones traders today, you have to be very careful. If the Dow Jones have to stay above OP, then likely there is a possibility that it may go back to the RL level. Okay, so traders, you need to take note of that. Okay, just to remind you again, there is a possibility that the Dow Jones can go back to the RL of the BNB. All right, are we clear with this? If everybody is clear and you're online, please key number 1 right now so that we are very clear with the whole thing. All right. Okay. RL number. Okay, hold on. Zachary, always want to be different, huh? The RL number is 35,090. I repeat, 35,090. Okay, so which means that we are not too far away. We are approximately about 200 points, about 260 points away. So it is possible for the Dow to go up 260 points easily in a single day. So that's why traders, you need to have your eyes watch carefully onto the market as of now. Okay, so traders, you must take note of that. Okay, so that is the excuse me, that's the Dow Jones forecast. And I told you, right, the reason why I left the short-term trend line, because I suspected that this may actually happen. So if you rewind the tape, I already said this, that I suspected that there is a possibility that the Dow may actually purposely climb back to the short-term trend line. So that's the reason why I left the trend line alone, and that is the reason for that. So the question will be, will the market cross back above the trend line? Well, if you look at it, it actually missed the line just a bit. So we will see how it goes today. If it does happen and push it up, right, then of course it will stay above the short-term trend line, and that it's a good chance that it may break the all-time high again. So traders, again, I need you to pay attention to details these 2 days. All right, it's going to be very crucial. It's going to be important. All right, so that is the market. Let's look at the Hang Seng. The Hang Seng is still kind of flat at the moment over at the top. Okay, but it is now basically having about resistance at the KTR plus 3, which you all know that KTR plus 3 is actually our usual resistance of the day. All right, so that's why you can see this is happening now. Okay, then let's look at the Dow Jones for today. Okay, so this is the Dow Jones. Now, Dow Jones today is a CCRY, which is actually a buy. Okay, based on OP, it's a buy. CCRY, based on the day chart, it's a buy. Now, but the problem is, if you look at the entry price to the stop loss, wow, it's more than 1,000 points. So which means that you must at least have at least $1,400 to actually enter this market. Why? Because your range is 1,000 points. So some student may ask this question, Kel, why must we have 1,000 points, for stop loss? We can do a 200 point, 300 point, 500 points. It's good, right? Well, let me just give you a simple understanding here as well, right? Okay, that example, right? The rule of the game is that we believe that when the market U-turn, this is where we buy, right? Based on rules. And then the stop loss will be here, right? So we can accept this. So by logic itself, right, now the thing is the market opening price is here and the stop loss should be here, all right? So when it's small, people can accept, but when it's big, people find it very difficult to accept, okay? And they want to try to make it different. So what happened will be is that if you try to make it different and put a stop loss at maybe 300, or you want to put it at 500, there is no problem or wrong about this. It's actually absolutely right. But the issue will come and arise is when the market after you buy, if the price come down and trigger those points before going up, right? What do you see? Then you will see yourself down with 300 points or 500 points initially, and the market will have to go up by at least 300 points or 500 points from the entry price again, if you re-enter, to make back the losses that you incurred earlier. So which means that if a person who basically took the full range of the stop loss instead, even if the market comes down to 300 point to 500 point, he or she will not be affected because he already prepared for this. So the expectation is all prepared. And if the market later on, even if it hit the 500 point, it recovers, right? The person don't lose money. And if the market go up by 500 points, example, this person will be more than comfortable to take profit. All right. But the thing is, if the first person who initially do the 500 points stop loss, then of course, right, if even the market go up by 500 points from the entry price again, that means it just break even. You got my point, right? So that's the reason why some people will tell me, say, Kel, you know what? I don't do this. I can do something different. What I can do is I can do this. Okay. So what they tell me is, Kel, I don't put 500 points. It's too heavy. It's too much. I put 100 points. So 100 points is the stop loss I put. Okay. So if the market hit me and then go up, right, I will still make money, right? Okay, so what is the problem here itself? Can you tell me? If I say I put 100 point stop loss, I just basically put a manual number, 100 point stop loss, okay? what will likely be happening to you? Let me see whether your guys understand what I'm trying to say. If you put a 100-point stop loss, right, is it make sense? Because 100 points is $100, example. So that means that if the market go up by 500 points, then this person will make $400. So it makes sense, make a lot of sense, right? So what do you think, guys? What will happen? Yeah, Zachary, I will buy you that. I'm always looking at my comments, okay? I'm always looking at, unless it's like it's flooded suddenly, then I'll miss it. So guys, what if happen? What if you put a 100-point stop loss? What will likely be happening? Okay, we'll wait for your answers. Okay, I will prepare. Wait a minute. Okay, so conveniently, many people say, okay, I put 100-point stop loss. Then, but what will happen is that the market may hit up, hit up, hit up. So that may be triggered exactly, Eric, exactly. It may get triggered not only once, maybe twice, maybe thrice. Okay. And what will happen after that? You do it for a few times. What happened? You will tell me, okay, you give up already. Okay. 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 You'll be taken out. You'll be hit after 2, 3 times. You say, okay, I'm too stressed. I'm too tired. I cannot take anymore. I don't do anymore. And of course, after that, what happened? As usual, bang, it went up. All right. So what happened again? So you tell me, hey, Cal, you see your technique doesn't work because after 3 times I lose money. Then the 4th time it works. Right. So it's bad. You understand, guys? I have been doing all this back testing for you, and I know that the probability of this. So that's the reason why, okay, that's the reason why we coach you to do this. We coach you to enter here and have a stop loss here. Okay, 1 minute. I need to pick up a phone call. Sorry, yeah? Just a moment. Hello. Yeah, yeah, yeah. Okay. My kids, they really go through right. Everybody, just give me a minute. I need to be offline for about, not offline, I mean, basically I'm around, but I will be a phone call urgently. So you just hang online. I give me 5 minutes, okay? Apology on that. Okay, just give me 5 minutes. Okay, this is an important phone call that I have to pick it up. Okay. All right, if you need to go, you can just go ahead. You can watch the replay later on. Okay. So hopefully you understand. Thanks. Hello, yes, Zachary. I know that you want to draw things, cannot draw. Ha ha ha. Okay, all right. So, guys, apology for keep you waiting. Yeah, something happened just now. I need to attend to it urgently. Okay, so that is the case exactly. My point. Okay. All right. So there will be a few times the market may trigger. So the question is this. All right, but some of the people like Arun, he does practice that. In fact, he's not 100 points. He's $100. Okay, so if you have the mental strength to keep on doing certain things and keep your losses small, then obviously, right, if the reward is reward is big enough, then of course it makes sense. So if a person tells me that, KL, you know what, I believe you go up by 500 points eventually. So even I lose 2 times, 3 times, 100 points, eventually I still make 200 point profit. It's still good for me. Yes, they can go for it. And some people who is even a bit stronger in this trading mindset, they can actually go small lot size first, and then if the market doesn't trigger them, they add in position. So what will happen is that they can actually do small size first, and if you trigger them, they lose it, but just lose a little bit. Okay, but every time if the market trigger and the market gets stronger by the chart, all right, then what they will do, they will trade even more, and that is whereby they can get back their losses. Got my point now? So there's many ways to do certain things, all right? So all you need to do is just think for a moment, ask yourself the probability of this achievement. How can we achieve this direction here, and we trade according to plan? Okay, it can be done. Okay, so for today, as long as the Dow Jones stays above OP, it's a buy. All right, KSI is green, so it's a full bullet trading. But the only problem is that the market itself, right, is like 1,000 point. Okay, so just think about that. Okay. All right, so that is the Dow Jones. Let's continue. Okay, let's look at the next market. Yeah, this Zachary is a naughty boy. Yeah, indeed. Okay, NASDAQ. Now, NASDAQ, I told you guys, NASDAQ stays above the MA30, and that was a very clear sign that the NASDAQ will be going up, and indeed, it really happened. And of course, now it's trading nicely above the MLP of yesterday. Okay, so the MA30, as you can see over here, is very clear. Okay, MA30 is here. Can you see that? MA30 is at 14681 level, so we are quite far away, so all is good to go. Now, for people who have been asking me, Kel, if I have a short position on a NASDAQ, then how? Now, I'll be very upfront with you guys. If the market in an uptrend, right, the worst thing to happen to you is the market stays above OP of the day. So if the market stays above OP of the day and you're in an uptrend position, it's always good to either cut your position or you hedge your position, because there's no way out. Okay, there's no way out of here. The only time when the market will be in your favor is when the market comes down or break the uptrend. So at the moment now we are seeing it's more like an uptrend momentum. So for those who are short selling the NASDAQ because it's, you think it's a bit too high and you think it's like too high to go higher, then you must take note of what I just said to do the hedging tool part itself. Okay, it's very, very crucial and important. Now do note that this is the last BNB, which is here. So there's no more BNB along this direction. So it's staying above the BNB RL again. Of course, you cannot use the one-time ones, but at least you know that it's now staying at BNB RL. So that is the resistance point to watch out for today. All right. So only if, let's say, the market loses the RL, which is the 14803. Now 14803 is here. So if the market only if the market loses 14803, then that is the signs of some weakness in the NASDAQ. If not, it's still pretty bullish. Okay. Okay, so that's the NASDAQ. Okay, let's look at NASDAQ day chart right now. Now the NASDAQ day chart is still showing very good signs of further upside, and it has broke the TSCB, which is for PTP student. So that means that the NASDAQ still has pretty good room to go higher. The KSI is green in color and it's also a KSI jump. That's the reason why we see further upside. So if you ask me about NASDAQ, right, from the chart wise, all looks good. It looks like it's going to go up towards the 14,907 again. So that is what I'm seeing on the NASDAQ right now. Okay. All right. That's NASDAQ for you. Then we look at the S&P 500. Now, S&P 500 also stay above the moving average. above the MA30, and of course has created the S&P going higher. And of course now S&P is now get back to the recent BNB SL level. It stay above again, so that's why it become a form of support. So if you want to look at it to go down, you have to go below 4359. You had to go below 4359. All right, 4359 is too far away. 4359 is just about a couple of points below. All right, so if the market loses 4359, then maybe for people who really want to take a short position, you can try. But at the moment now, it's still pretty bullish. Okay, so you heard me on Dow, NASDAQ, and S&P. The word that I keep on using is bullish, bullish, bullish. So do understand that. Okay, now it's not wrong to short something that you think that it will go down because it's too expensive, which I felt that too. But the market has this printing machine that you can see that yesterday across the board, when everything's a buy, it's like someone switched on the button and then everything just buy. You know that? So there is two ways to look at it. One way is that because the market is still not end, the bull market is still not end yet. There's going to be more upside to go. The other way to look at it is the more pessimistic way is because the market is actually near, it could be potentially a dead cat rebound. So later on during the second part, the alternate market views, right, I'll talk about this dead cat rebound part. Okay, all right. So stay tuned for that. Okay, so that is what we are seeing right now for the S&P 500. Let's look at S&P 500 in terms of the TWB chart. Okay, here we go. Now, this is the CCRY right now. Okay, it's a CCRY right now. Also, S&P is a CCRY. It looks good. But the problem is this CCRY from opening price to the stop loss is more than 131 points. So quite a bit of points here. And the KSI is red, right? So KSI is red, you should actually go half bullet. So that means that if your bullet size is not big enough to take down this entire range, you shouldn't be even trading on it. You got my point? Yeah, that is how we actually get into this. Okay, yeah? Okay, all right. Okay, I just saw Min Hui just say about China A50, right? Yeah, indeed, China A50 has just pulled back all the way to the opening price. So that's why this morning, just now I told you guys that because look at this big gap, big crocodile mouth of this is really quite detrimenting towards the market, and that's the reason why you can see China A50 have been trying to stay up, but every time it goes up, there's some pullback here. So undeniable that should pull back Hang Seng also, right? Let me take a Hang Seng. Indeed, Hang Seng hit the chocolate bar I mentioned to you, and now has pulled back about 80 points. Okay, about 80 points. Okay. All right, so let's look at the DAX, last one. Okay, look at DAX right now. Okay, this is DAX. Now, DAX yesterday do a super recovery. Now, guys, yesterday we talked about MLP, right? Remember the MLP? And the market hits the MLP and rebound. That's why during the PTP, I'll share with you guys how to use this MLP in a very different way, a unique way, so that you guys can actually make money like MTrader. So today, DAX most likely will cover gap. There's a good chance that the DAX will be, the gap will be covered this morning. I mean, later this afternoon, it'll be covering gap. The only question is, can it touch the MA30? Now, what will likely be happening is, if the market gap up and then touch MA30, it's not expected. But if you fail to stay above, then there'll be some profit taking. Okay, so this is my personal view on how I see DAX today. If the market go up, but it should be kind of resisted by the MA30. The MA30 is 15,670. Okay, 15670. Okay, 15670. Okay, all right. So that is the DAX for today. But we can take a look at DAX yesterday. How we have traded if we have DAX on our hand. Okay, so this is what happened, right? You see DAX. Now yesterday DAX opening price was beautiful. The opening price is where that is above pivot 1, and you notice pivot 2 is at the bottom, right? Again, no one draw pivot this way. So what should you do? Very simple already. As long as CCRY, you will buy. All right, you don't need to wait for trigger because by opening above pivot 1 is already a trigger on its own. But the only thing is that the KSI was great in color, right? So that means that you just have to go slow in your sizing. That's all. You just have to go slow in your sizing. Okay, so if you look back and look through what happened yesterday for DAX, Now do note DAX, Hang Seng, and US stocks, we use 5 minutes, and big cryptocurrency that we use 5 minutes. Okay, use 5 minute chart. Okay, so you can look at the DAX yesterday. If you follow the rules of engagement, you will notice that this is the first buy, then this is the second buy, third buy, fourth buy, sixth buy, seven buy, 8, 9, 10, and so forth, right? So yesterday, if you had just follow rule and buy regardless, you will have made money all the way to the closing. All right, of course, there will be some losses in between, and this is usually the point people get a bit upset because first trade they don't enter, second trade they may not enter, third trade they go in a bit, then the fourth, five trade they enter a lot, they get slapped for the market. Then when market come down again, it shows signs of buying up again, but you lost money initially, or the last three trades you get pissed off, and then after that, wow, it go the way up again, and you say, yeah, I should enter and stuff like that. Don't you agree with that? This is always happening with traders, is that they don't understand the importance of trading same lot size throughout. All right, same bullet size throughout, and then of course you have to adjust accordingly to KSI at the bottom. So if you actually adjust accordingly and you also follow rules, right, you should have entered a lot here. All right, you should have buy here because it triggered the KTR plus one, it recovers, and it's a buy. So of course this is a very, very good buy. And if you have paid attention to the details, you can see the KSI turn green, right? Very strong green. So that is the reason why DAX went all the way up. And of course, when DAX goes up, the Dow Jones, the NASDAQ, the S&P also follow through. So that is how we actually do trading with one another, infer with one another. Okay. So guys, everything you can see, you learn one thing, but you can apply to so many markets at the same time, as long as you have the indicator on your hand. That is the brilliance of this. Okay, all right, so that's DAX for you. And let's look at the last one, it's the Nikkei. Now this is Nikkei. Nikkei is trading higher right now. Okay, it's moving towards the MA30. Okay, but it's still a bit of distance from here right now. Overall itself, right, Nikkei is downtrend. Obviously, it's a pretty downtrend. It's a clear downtrend, and there's nothing more I can say other than it has. Because you see, you look at Nikkei. Look at Nikkei. This is Nikkei chart. Okay, if I were to take away all those lines, just take it away, just to show you just like that. Okay, you can see that Nikkei is actually a trending down market. Okay, trending down market. Okay, can you see that? It's a trending down market. So, and the lows of this cycle went lower the last few rounds. So there is still a small possibility for Nikkei to go up a little bit, touch MA30, and it may have to come down again to this point. So this is the long haul of how I see the Nikkei. This is the long haul. Okay. All right. But of course, in the current situation right now, as long as the market, this is the MA30 and this is the MA200 at the moment. Okay. All right. So that is Nikkei for the conventional chart. Let's look at Nikkei on the non-conventional chart, which is the TWB chart right now for today, Nikkei. Nikkei. Okay. So Nikkei chart today, opening price is between two pivots. So above OP, you can buy, but because KSI is red in color, so which means that if the market hit KTR plus one, you can take profit. And you can see that Nikkei opened already, straight away went up to KTR plus one, trigger plus two, couldn't stay on because KSI is red in a day chart, pulls back straight away. Okay, so that is how it works. And the crazy part is all the technical points are already predetermined for you before the market even starts. After the opening price out, of course. Okay. All right. So you got the idea now for the Nikkei, everything. Okay. I covered all the indices. Let's look at the commodities, shall we? Now, this is gold. Now, gold is still seemingly coming down. Now, let me ask everybody here. Are y'all bullish or y'all bearish in gold right now? Please answer me. Bullish or bearish in gold right now? Yeah, please key your answer, please. Okay, so we have how many of you? Eric bullish, Wilson bearish, Jerry bearish, Fred bullish, Low bearish, Gary bearish, Cheng Hui bearish, Carl intraday bearish, otherwise bullish. Okay. Now, do you notice that 50% of you guys or 60% of you guys are bearish, 40% of you are bullish, right? So what does it tell you? That means that a chart can be given to anybody, but there could be a chance of two different opinions. All right, do you understand this? So for me, it's all right. I also have my time I'll be wrong, and the time I'll be very, very wrong. So of course, when I'm wrong, there are also big times that I'll be right. So end of the day is that the right or wrong, right? It really is a thing that, you can only say that it's going to be 50-50, okay? But of course, when you can see the thing clearer, when you know that everything's like, you're very sure there's going to be bullish and it's actually following through, then of course you should actually take advantage of this. All right. So let me just share with you my personal view on gold right now. Okay, so this is the gold chart you can see, right? Okay, this is the lowest, this is the highest. And I redraw the Fibonacci for you, and you can see the amazing. Now, we draw Fibonacci, right? One thing that you must take note is that the high and low that you choose is subjective. Okay, it's up to you to think. But when the market actually perfectly touches that all the technical point, that means that your drawing or your chart that you're using or the points that you are utilized is the same one that everybody's using, and that's what you need. Because if everybody is using the same chart point, then two things will happen. One, you have the best of the world, everybody buy, you also buy, all make money. But on the flip side, if everybody knows that's a buy and the market doesn't hold, that is where our trouble comes in. You got my point? Okay, so let us be objective here. Now, you notice that the 50% mark and the 61.8 seemingly pretty accurate, right? Look at the way the market stopped at those technical points. You can see why the 50% mark, the 1762 is so powerful, okay? So write it down somewhere that you know that the downside can be as much as 1762, okay? All right, so that is the downside for gold if it actually falls from here, okay? This is something that you must be reminded, because I know many of us are involved in gold, so we need to be very careful when it comes to gold, because the downside potential is 1762, okay? All clear? All right, Susan is bullish, okay. Then, of course, the next number is 1689, because that is the second number, the 61.8. So these two numbers, you write it down somewhere first, okay? All right, done deal? Okay, 1762 and 1689. Okay, clear? Okay, now I clear up this. And then after that, I expand it bigger. Okay, now what we are having now is one big consolidation of the MAs. Now you notice that throughout the last 10 over days, the MA 200 has been a very strong support and resistance. So which means that if the market can stay above the MA 200, the market will go up. All right. If the market stays below the MA 200, likely it's going to come down, right? And if you look carefully, right, the MA 30 acts as a very strong support for it, a very, very strong support. Okay, got the idea? All right, so now with this indication, that means now I must tell myself a very clear cut point is that the MA 30 is going to be a very important support, which is now at 1800. The MA 200 will be now at 1810. So it's very near, it's a $10 consolidation. All right, so which means that if let's say the gold goes down and trade below 1800, there is a very good chance that gold will come down all the way to 1762. Got the idea? Okay, got the idea? Okay, good. Now, if gold can go above the 1810 and stay above it, then gold can go back all the way to the high of 1836. Okay, what idea now? So which means that now you should know that you have two key points to watch out for, 1810 and 1800. And if the market stays below 1810, you can aim at 1836. If the market stays below 1800, it may go down to 1762. Okay, so this is something you have to take note. All right, this is a very important chart. Please take note of that. This is going to be very, very important. Okay, so this is the part one of it. Okay, clear. Now I want to share something more important to you now. Is this okay? Now the market itself, right? This is the entire wave upwards. Okay, entire wave upwards. So the 50% mark, you also realize that it's also the same point. So you see, if I take another Fibo now, take it from the low end to draw it up, right? Okay, wait, the lines color need to change. Okay, a bit, you can't see, right? Hold on. Okay, if I take the lowest end to the highest end, the low to the high, and then the blue one is the next Fibonacci, right? I want to take a look here. You will notice that, right, the 50% mark, is where we are now, and that number itself is 1796. 1796. Can you see that over here? Okay. So if you look carefully, right, over the last few days, okay, the gold has been playing around at 1796 very clearly. So every time when whenever the gold hit 1796, right, that's where it will bounce. So it bounce up. Okay. So what does it mean? Now, I already told you 4 technical lines are that if the market keep on touching it and rebound, you keep on following through. But there will be one day it will fail. Okay, because that's what is the whole objective of trend lines. When it fail, right, that is where the alarm will ring. So I'm going to say this up front, that 1796 is the last support. If the market go below it, which is very normal, you can see it go below it and it goes up again, it's always a good buy. Can you see that? Every time when the gold hit 1796 and below, once it cross back again, right, you buy, right, you're very safe. Got it? But because it is so safe, right, then if the market goes below 1796 and stay below 1796, then I can tell you all is lost already. So that means the market is going towards likely is the 1769 level. Okay? So if you're all clear of what I just say here, please key number 2 right now. This is very important for gold traders. This is very, very important. You really must understand what I just shared with you, okay? Very important. Clear? All right, this is something that I want you guys to be sure of that, because I mean, I will be very busy the next 2-3 days because I got a lot of things on my plate right now to handle. Hence, therefore, right, I don't have the time to, do much with you guys online. So I try to do all my sharing with you through MAO and make sure you guys know exactly what to do. Okay. All right, that's a goal for you guys. All clear. Okay, so weekly chart, you can see that it got rejected by the 1820 MLP. So that's the reason why it's happening. And of course, silver came down perfectly, hit the technical level, spot on, right? You see, I told you silver will come down to $24.77 yesterday and 78, like I say. And truth be told, it touched the beautiful level at 24.78, and straight away it rebounded and it's up by almost 50 cents. So you see, cool, right? Well, so that means that the TA really, really works. And of course, chocolate bar is a very powerful tool if you know how to utilize it. Okay, so that is how it works for silver yesterday. All right, for those who buy silver, bought silver, congratulations to you. Okay, so now for today's goal, right, I need you to take note of our indicator. All right, this one was conventional. Now the opening price of gold today is actually near the P1, and it already traded this morning, right? Now what is not so good is that yesterday gold closed below the HSL. Yesterday gold closed below the HSL. So by right, the gold should be coming down again later. By right, okay, by right only. So gold yesterday low was 1794, and of course gold after that recover back, right? So if gold later on breaks below 1800 again, I kind of believe that it will test the low of yesterday again, because the closing price of yesterday's gold is the first time below the SL level. So you got my point. Yeah, so there is a possibility for gold to come down to 1794 again. So that is where it could be crucial, because if the market can rebound above it, 1797, then okay, fine. 1797. But if we fail, then we have a problem already. Okay, so traders watch out for that. The only good part of this is the KSI is green, so the downside could be limited. All right, but of course, things can change throughout the whole day. So take note of that. Those numbers are given to you. Just make sure you don't make the mistake. All right, get it correct. Okay, so that's gold for today. Now, of course, if gold stays above OP later on and cross the pivot one, wow, it'll be a good buy. Okay, because everything will be in line already. So guys, only buy when the gold goes above the pivot one level. Okay, it's 1803.27. Okay, that will be gold, and the one market that everybody's talking about yesterday is crude oil. Now, crude oil yesterday, wow, what a run. Crude oil yesterday did a fantastic job. Look at the big white candle. Yesterday, the day before was doji, right? So I told you before many times, guys, when you see doji, what will happen? Likely doji day, next day will likely see a directional day. And directional day is very simple. Above OP, just buy. This is something that I've been talking and advocating for longest of time. I'm probably the only trainer in Singapore does that and says this. Doji day, next day, high chance directional day. Above OP, just buy. Below OP, just sell. And I've been saying this and been saying like a broken recorder. So yesterday was very clear cut. And I told you guys, if crude oil price goes up, right, equity price will also go up. So yesterday when the crude oil keep on going higher, right, I know that the equity market will still be going higher. And that is what happened, guys. So even though fundamentally crude oil price go up, cost increase, but I tell you, this sort of BS doesn't work in the real life market. I'm serious with you. You can do a back test, you will know my point. It's only when it's like historical high and very high level, like 147 US dollar per barrel back in year 2009 or 10, at that type of crazy level, maybe that one will be detrimental to the finance of the balance sheet or the P&L. But when a normal day is out, right, when the market is down, when the crude is up, right, stock market goes up. That's why you look at it on this day, when the crude oil price came down so much, right, the equity market also came down. So now you understand why crude oil is one of my key indicator for me to watch out for when I trade. Always like that, okay? All right, so not always, sorry, I just prepared with a little gonna quoted again. Majority of the time it's like that, okay? Put the crude oil chart side by side and you can see it already, okay? Okay, all right, so that will be all. I just saw some movement again on the China A50. It's a quick one. Okay, it's recovered again, so it's very choppy, right? There's a lot of buying interest, huh? Hong Kong has now back to day high. See, wow, Hong Kong break day high, 27,700. Wow, okay. So you see, all right, it's going to go already. I think it's going to go for the gap already. All right, there's still a lot of buying in the market. I really cannot deny this. Too much buying. All right, everybody just want to buy. Everybody just want to make money from something. So that's why everybody's dumping money into the market. No one is going to hold back. Okay, I just saw some news. China and US China, sorry, what did you write there? China and US are shipping goods to each other at the quickest pace in years. Okay, so another making like the tariff war and pandemic never happened. Okay, all right, so that's what the news came in. That's why probably they push up the indices. This is from Bloomberg, by the way. Okay, guys, so all cool with this? All clear? All right. Okay. Okay, guys, I come to the end of the TA side. Thank you for listening. Now, if you guys want to continue with me on the fundamental side and alternate market views, you need to stay on. Okay? All right, just give me a quick water break. Okay, so July's earnings, we have seen all Coca-Cola, Johnson & Johnson, indeed they came better than expected. I told you guys, Coca-Cola and Johnson & Johnson, their data will be good, really came out nice, okay? So today we have Intel, we have Snap, we have AT&T, we have Twitter. So what do I see? Well, Twitter should be flat, in my opinion. Intel, maybe yes. The rest, I'm not too sure. In Twitter should be flat, if not down. This is my personal view. All right, Susan go live as usual. She's been doing a great job yesterday. Susan, wow, she called for crude oil to buy. Remember, those who actually went online with her, Susan called for buy, and indeed crude oil went all the way up. And of course, Susan made good money. Now look at it. Even though Susan buy sell trades with her account, right? There's still losses. I mean, there's no way you use the TWB system and no losses. So yesterday, Susan did a great job. She had managed to come in with $422 profit. Wow, that's a lot of money in a single day. Susan, you're a money-making machine, okay? So guys, that is why I say the system works. You just have to follow. And of course, yesterday I had done my PTP introduction session. I will upload the video shortly. Supposed to be yesterday, but I was too tired yesterday. So for those who want to join the PTP program, it's on the 14th, 15th, 16th of August. But do note, you can actually come in early by paying first, and then you can get to go into the group chat and then learn the PTP content first before the class itself. All right, so you can contact Susan. All right, so you can learn first, use first, and class later. Okay, so that's my quote for you for PTP. Learn first, use first, class later. Okay. All right, so for the inventories, as you can see, the last few days when the inventories was as a negative sign, the crude oil plunged down. And this time around, we have a positive sign, the crude oil price came up. So you can see it doesn't really follow fundamental, but it doesn't matter as long as you follow the rules. That's the most important thing. Okay, so today will be the initial jobless claim. And of course, let me give you the numbers. My personal view, I mean, just for the fun of it only, initial jobless claim, I believe is going to be higher, 380,000 for me. I believe that, in my personal opinion. As in home sales, I cannot tell you this as I don't know. Right? Just give a wild guess. Okay, wild guess. Maybe 5.3, maybe just a wild guess. Okay, right? So this is my personal view. So of course, everybody have their own right to have their own number. Okay, so the Dow Jones from the very opening bell all the way went up again, very usual. Every day is almost like that. So what's new? Okay, so stock rallies for second day. Dow jumped more than 200 points to recoup Monday's losses. So basically, right, better than expected earnings from Coca-Cola, Johnson & Johnson added to the bullish sentiment. I told you that. And of course, the market rallied 550 points the day before, and now and another 300 points, 200 points today. So total out is almost 800 points already. So whatever they lost technically has came back. Okay, so it's really a textbook bounce, but only the question is it going to be a real recovery or it's going to be a dead cat rebound? So now we can see that the yields also went up by 8 basis points to 1.29. It was actually 1.17 at one stage. So the question is, I don't understand, is that, okay, fine, if the yield come down, the stock market is going up, I can buy you. But now the yield also went up, right? So the stock market also go up. And then the question mark is, So I tell you guys, 1 + 1 is never equals 2 in the financial market. I'm telling you many times already. You don't go and bother by all this because you make yourself even more confused, okay? There are many ways to rewire you and they say, okay, this one is good for the market. The same thing can be bad for the market. So you see that? Yeah. So it's just telling you inflation. Inflation can be good for the market. Inflation can also be bad for the market. It's just how you explain it, that's all. So basically, right, everybody feel that this is getting comfortable and the risk asset is over, especially now the one that the sell or just maybe a good chance to buy. So this is what the feeling that people are getting right now, and people think that this is good to go. And that's why this morning caption, right, is it because now really got nothing to worry? So that is my point. So the Dow Jones, as you can see yesterday, beautiful. I show you already, right? Above OP, above pivot 1, KSI green. Only one thing to do now. So yesterday Dow Jones, right? It was quite tough at the start. Ding dong, ding dong, ding dong. Then after that, the zebra formation came in. Then of course, once it goes above OP, you can buy, right? OP is here, you can buy. So first wave, it went up already. Then after that, the price come back down. But because the market already above OP and above pivot 1, you don't need to wait further. Once the market do a CCRY, you can buy again. All right, and then if you miss the second one, the third one, CCRY, you can buy again. So you see, as long as the market is above OP and above pivot 1, it already have a trigger. So as long as the CCRY above OP, you can buy in general. So of course, some people will say that, but at the end of the day, we do it on gold, we didn't make money, right? I say that, yeah, sometimes the market doesn't really, give you that. But I can tell you, generally speaking, for the last, 600 MAOs I've been doing, okay, yeah, it works, okay? All right, so you guys must understand, okay? Not 600, sorry, for 1 year, right, or 300 lah, around there. Okay, all right. Okay, so that is the Dow. Okay, so goal wise, forecast wise, everybody's now looking at the 20-day moving average. So every time they tell you this, tell you that. So not exactly which is the one, but most of them say that they still believe that gold will likely be staying higher. There are two technical points. It's 1791 and 1748, which is almost the same number that we have on our site. Right, so for gold, it's opposite. Okay, opposite is true. Below OP, below pivot 2, sell. Below OP, below pivot 2, sell. So what happened? Let's take a look. Sorry. So once below OP, below pivot 2, you can sell. So the first wave. Now, of course, the first wave, you lose money. You didn't trade, I can understand. Then next trade, CCYR, you shorted. Unfortunately, got stopped out, right? So lose money. So one win, one lose. Then you do a CCYR to short again before you notice second loss in a row. So after these two trades, right, how many of you will be saying, okay, guys, I forget it, I give up. After two trades, I don't want to trade anymore because it's like, eating my money, intraday is difficult, it's tough and stuff like that. But if you look at it carefully, when the market hit the pivot 2, now I told you guys, if you ask me between who got a stronger impact, pivots or KTR, of course it's pivot. So now you see very clearly the three candles, right? All three of them tried to stay above the pivot 2. It didn't, and closed marginally below pivot 2. Is it by coincidence? Now, I mean, coincidence for a moment I can buy you. Coincidence for 2 moments I can still forcefully accept you. But when it's coincidence for like 3 15 minutes bar, this is no longer coincidence. This is more than that itself. So that's the reason why you can see that the market did a CCYR after that, and amazingly, what happened? The market did a CCYR, breaks below OP, and the market basically collapsed. You see that? The market collapsed. So that's why, again, pivot trading with the right tool and asset, you will know what to do, and if you do it properly, it's outstanding. Look at it. This is really incredible, right? Look at it. So traders, this is why I keep on reminding you guys that trading is never too difficult. You just have to follow rules. All right, follow the rules and you trade according to plan. Okay, so that's what we need to do over here. Okay, for the gold. But then after that, when gold hit the technical level at 1796, I told you earlier, it straight away rebounded immediately as if that they saw something like that. The market, once it goes there, it rebounded. So that is quite cool, right? So guys, do take note of this about what I just shared with regards to this. Okay. All right, so let's look at the global news right now. Global news, okay. Global news shows that, right, WHO feel that there is going to be the next stage, okay. There'll be another early stage of another wave coming in. That's from the World Health Organization Director General, right, Tedros, okay. So he's saying that there's going to be another one, and he's concerned with the Olympic, but they could go with it. So he put these words: the pandemic is a test, and the world is failing it, okay. So, well, seriously, even fail, so what? The market is not going to come down because there's so much money pumped in the system. So seriously, it's not going to be bothered. Then, of course, China debt is rising. We can see that. But so what? The stock market is recovering today. So you see all these news are coming in negative, but the market just don't care because the market just want to buy. So there are 3 main things that the China need to watch out for. Number 1 is recently the bad debt manager Hua Rong, right, has spooked investors with their very bad falling in the earnings. And of course, the other one is the default corporate bonds in China now. The defaulted corporate bonds in China is already now $62 billion. That's a lot of money. And of course, the third one is the weak point in some of the province and local banks, city and rural commercial banks. They have a problematic with their loans and a lot of manipulation, a lot of briberies and so forth. So that's why people are concerned by that. So there are 3 main reasons, and people should watch out for. But again, all these are just big fundamental. To really affect the market, it takes something more than that. Seriously. Okay. All right. Now, Bitcoin, as I told you guys, even Bitcoin, Ethereum, ADA, Dogecoin, all of them all went up yesterday. it seems that nothing has happened. Everybody is buying now, and they feel that right, it's now they're again telling people that it's time to buy, and they say that okay, it may go much higher. But of course, another guy was saying that okay, if this thing is just only a dead cat rebound, so the market may actually come back down again. So if you ask me, my personal view is yes, I believe that the Bitcoin will come back down again. Why am I so? Because I realized that when the market in general, if let's say Bitcoin goes up, when the market is down, equity market is down, I can buy you that. But now we said equity market is going up and Bitcoin will go up, right? It's very clear cut. Someone pressed the all buy button. So this one may be resisted for a bit. Okay, so that's my personal take. All right, so what are the reasons to be bullish right now? Santoli, he is a CNBC correspondent and he gave a very good overview. He felt that right yesterday was a constructive follow through of the buying from the previous day, and the market now is able to hold on to the 10-week moving average now 10-week, and he felt that right now it's the same thing that what happened the last time for that we saw in the late June and post event, and the market hit the 50-day MA and rebounded, right? Remember I showed you yesterday, so it really happened, and of course. This is a bit of reminiscence to the 2013 market, which we saw 2013 go all the way up itself. So this Santoli think that this is going to be much higher, and he felt that right. The most important thing is that S&P is only 1% off the high, so the market breadth is still okay. But of course, this is Michael Santoli, handsome guy. But of course, he also said that right, the single stock earnings is going to be heavily watched by the market. And of course, counter like Netflix and Disney, they may not be in the best good side if the market do go back to work. Okay, and of course, he also said that the market breadth is strong and 90% of the new volume is upside. So a bit different from what we have, right? So I will look at it later, but maybe they used a different bunch of stocks to do the arrivement of their forecast. And the last one is the VIX indicator. Now VIX came down from 25 all the way to 19. I already told you guys to take some profit. I hope that you guys have done it. Okay. All right. Now we're going to go into the last part, which is alternate market views. And alternate market views is where I talk about bearish in the view on the market. So if you guys are ready, I'll start in about 10 to 15 seconds time. Okay. If you think you're hurt enough, you can take a leave already. Okay, so ready? Okay, let's go. Now, VIX indicator, right? You saw I've been calling for buy on VIX, and I say that, right? VIX, if it goes down to a price somewhere around here, 16, you can buy. And of course, the market really goes up all the way to the high of 25. Okay, all right. Then once hit 25, you notice, right? You notice this, there's something here. This is a BNB. Can you see that? This is a BNB. The highest point of the entire chart is a BNB. And I said this many times before. If the highest point or the lowest point of the chart is a BNB, all right, for the intraday or the long-term trend or the cyclical trend, it's a very good indication that the market may flip opposite direction. I said this already. I'm not too sure how many of you heard it, but you notice that was what happened, and bang, it came down. Then after that, it tried to go up to 21, 23 yesterday, and that's where we unloaded a bit more. And of course, it went all the way down to close near about 18 yesterday, 18, 19. All right. So the point is this. All right. Is it a good time to buy? It is still a good time to buy, but of course, 16 is the best. Okay, sweet 16 is the best. You know, buy 18, still all right, because I told you my view is I still believe that it will go up to about 28, 30 level or 35 level at best for the VIX by end of September. Okay, end of September, we should see that happening. That is for VIX. And of course, okay, hold on, I need, okay, something wrong here. Hold on, error. Okay, now you realize that this is the what we call as the the implied volatility, right? The implied volatility tells me something that by the 26th of August, there is an increasing what they call movement. All right. Now this is the expiration of the options, and it seems to be showing that from the 26th of August, that will be the implied volatility is expected to increase. Now you don't see it from the mainstream media. This is from Bloomberg. This is from Goldman Sachs Global Investment Research. So why is that so? Because that will be the point of Jackson Hole. Jackson Hole is on the 26th month. So the traders are already, predetermined that there will be volatility during that period of time post the Jackson Hole. So traders, you need to take note of that. Very important. And of course, this is the U.S. trend, the U.S. 10-year yields versus S&P. So since October till April, remember yesterday I've been telling you guys, right, with regards of do you think that if yield goes up, S&P goes up? If you actually follow it from October until March, right, all the way it's been moving in tandem. And occasionally, it's all right, it does move together. But you look overall, you notice that the thing has diverged each other, right? So you can see yesterday when the yield goes up, right, the S&P will go up. So it does seem to have some relationship. Can you see that? Here itself, also same thing here, S&P goes up, right? The 10-year yield goes up. But the upside is not as strong as the upside of the S&P, and that's why the divergence. But it's not supposed to be like that, right? So therefore, right, there's only two ways to look at it. One is that either the S&P fall back all the way to below 4,000, or two, the yield shoot up so fast, S&P will go past into the moon, maybe to 4,600. So it is actually possible, okay? So three scenario. Scenario one, the yields goes up, then the S&P comes down. That's first one, okay? Possible? Well, logically, yes. Number two is the yield goes up, right? The stock market fly all the way to new high. That's the number two. Now, number three, I don't think that will happen. Very rare, not expected in the books. Is that, okay, the yield goes down, okay, and the equity market comes down very, very fast. So would that happen? Well, I don't think so. I don't think so. So I believe that the one that I believe is more likely this one here, the one initially, the one that S&P pull back and the yield goes up a bit. Okay, that's what I am seeing. Okay. All right. So that is the next one. Okay. Sorry. Now look at this. This is the USD COVID cases versus the TOIS volatility. All right, this is something very interesting. So all the way, so the COVID cases that when it come down, the TSY volatility index or the MAV move index. Now MOVE index, right, is the something like a VIX indicator. It's a yield curve that have weighted index normalized for the 1-month treasury options. So you notice that the last few days, okay, the market is going, last few months, sorry, is going crazy, and the volatility is increasing. And of course, if you let's say look at it, if the COVID cases is increasing, so will this TSV, and that will actually add pressure a lot into the market. Okay, add a lot of pressure into the market. Okay, I know what happened just now already. Hold on, it's on this particular in this chart here. Can I just, okay, I just noticed what happened. Okay, hold on. Now I want you all take a look. This is actually from Goldman Sachs, okay, sales and trading. Now this is a seasonal composite. So what they're trying to say is that now if the market is going up, it's kind of expected, okay, kind of expected. This is part and parcel of the whole seasonal pattern. And after that itself, right, after the 19th of July, which is now, the market will consolidate, which is like, looks like it's happening. And then after that on the 29th or 30th of August, there will be torrid selling all the way down, from the 20th of July, which is today, 21 of July, all the way, they'll be selling all the way down, all the way to August the 27th. Now this is from the source, so actually not very clear. So that is why they're saying that this is something going to be terrible. There'll be some selling towards there, so not too sure what will be happening. And of course, I told you right, the Jackson Hole say that, already have the implied volatility. That means there should be big movement coming soon. after the central banks all meet together. So that is the reason why, if I look at it, it makes some sense. If I'm a trader, I will do a short position somewhere around here when it's comfortable, and then lead it down all the way towards the Jackson Hole period. Okay, so that is what it's trying to say in this chart here, and the rest. Okay, that will be all for today's MAO. Thank you once again for waiting for me, and thank you once again for the little short in the break that just now I went to pick up my phone. If not, it's all right. I believe, guys, you have learned something here, and I give you all the technical point for gold. Please utilize it, do the best of it, and make a lot of money. Okay, this is Cal signing off. Bye bye. Okay, bye bye.